Good evening, ma'am. Welcome, ma'am.
Good evening. Good evening, everyone.
Sorry. Okay, so time is 5 and we will start now the fifth session of technical analysis. So as you can all see the slide, the first slide says that every trader has a pattern. So it means that you have already read about technical analysis and all and charts and all. So as the chart exhibits a pattern, every trader as per his personality and his knowledge and experience exhibits a pattern. So if you will try to draw your pattern, you'll be able to find out where you are in the path of becoming a consistent trader. So we'll talk a lot about it slightly later. Coming to the core topics of today. So today we'll be covering four topics. The first one is the most interesting one, and people generally crave for it. That is intraday trading. Then we'll talk about momentum trading. We'll talk about little bit about risk management, and then we go to the various stages of a trader, and then we come to the last part of the session today, which will be how to trade in the zone. So first and foremost, we go to the first topic, which is intraday trading. Now, as the name suggests, the intraday trading, it means that you are buying and selling the shares on the same day, and with the intention of booking profits on the same day. And at the you are not trying to carry your positions. You are basically taking advantage of the fluctuation of the price which are occurring on the same day. However, it appears that intraday trading is an easy way to make profit. It's just other way around. It is the most difficult way to make money actually, and the most difficult to master. But there are certain advantages also because it offers you so much of screen time. It helps you in doing a lot of things, seeing the patterns and all. It's a very good teacher also. Like suppose you are a swing trader, so you may be using your strategy in a swing trading, which will take about 2 weeks to play out. But you will only learn whether your strategy works or not after the end of 2 weeks, and your lessons learning will be slower in comparison to intraday trading. Intraday trading, your lesson you will like because of its faster nature, you will learn things faster, and you will make mistakes also more than what you do in swing trading because you are taking more number of trades, and your results are available on the same day. So you can come back and you can find out what is not working, and it's a better teacher than other forms of trading. So other advantages that it doesn't provide any overnight risk, and hence if you master the art, you can make consistent profit without worrying about too much about the overnight risk. So intraday trading is mostly based on trend following methodology. So as till now we have covered that technical analysis is you have to follow the trend. So same thing goes with intraday trading also, that you have to follow the trend. It's a trend methodology, and you have to use all those indicators and all those patterns which are help you to be with the trend. So, like any other competitive sports, is like only the very best can master, and you are playing again one of the best minds. So you have to be prepared that way. You have to work out in those ways that you think that you are a competitive person and you are going for intraday trading as a competitive person, and you have to work that much hard as you will feel that you would have worked had you been in any of the competitive sports. However, advantage over intraday trading is or trading is that unlike other sports, there's a age limit. Suppose you are in any physical game, so your shelf life is quite smaller. However, in this case, your shelf life is quite longer. You can even play if your mind is working, then you can even play till the age of 70, 75. So it's something like playing against computers. Intraday trading में a lot of big players, lot of fund houses are there who are using sophisticated algos to find out the edge, and they are using that edge. And we are a discretionary traders. We are not, trader which are using mechanical means. So it's something like odds are against you in the sense that if you are playing chess against computer, so it's very difficult to beat computer in a chess unless you are a very professional player. You will find it very difficult. But what happens? How we are overcoming it? How we are overcoming this algo system and this mechanical system? This is how we are going to talk about in the session to come. So first and foremost important is that intraday trader can be only as good as stock the as good as the stock he trades. So something like this is how we are beating the mechanical system. We are choosing only those stocks which you want to trade and in which we see clear edge. So for that, one has to do a homework a one day in advance, and you have to define your universe of stock selection. So something like you have to define, okay, that I will choose the stocks which are in FNO, or I will choose the top 100 stocks only, and I will do my homework in these 100 stocks only. Now, in those 100 stocks, you are looking for stocks which are likely to trend in the direction. So, what will happen? You will look for stocks in which some substantial news is there, okay, or you will look for a stock in which you see any unusual pre-market activities there from 9 to 9:15. Everyone knows that 9 o'clock our pre-open market opens and it closes at 9:07. So if you see any stock having a huge gap up or huge gap down, so you can understand, and volumes are likely to be high, then you can understand that this stock may be the stock for the play today. Apart from that, you also look for stocks which are having very high volumes. It means lot of institutions are showing interest in the stocks. So a stock will trend only if there are institutions in the stock. If only retailers are there, that most likely that stock will have lower volumes and it will chop around. So basically, you're looking for those stocks. That means some news is there, some pre-market activity is there, and volumes are high. So you will choose those kind of stocks. So you will keep a watch any stock which is gapping up 2% or gapping down 2%. So you will have a look upon those stocks and you will try to play in the direction of trend. Only very rarely the pattern comes when you go against the trend, in which only two type of things. Well, very rarely it happens, but sometimes it's substantially rewardable. That is when there's a gap up on very good news. So sometimes what happens that market or any stock has been going up for a long time, and now the good news come. And when the good news come, the stocks has a gap up opening. But after a gap up opening, if you find that it is making a topping out pattern, something like lower high and lower low, or head and shoulder pattern, or something like that. So sometimes reversal happens from that point of view, that point of time. Similarly, what happens? Suppose there's stock which has been falling quite a lot, and now there's a very bad news, and the stock has a gap down opening. So sometimes what happens? All the bad news is already discounted, and you get a pattern there, which is a reversal pattern. So sometimes these kind of stocks result in a huge short covering, and you can make a substantial amount of money in this kind of trades also. But difference is that you are not taking these trades unless there's a very big gap up opening or very big gap down opening. So apart from that, you follow the patterns which have been covered earlier in the sessions, and these sessions again, because they work in all kind of time frame, so they work very well in intraday trading also. And a reasonable market cap is means the stock should have a reasonable market cap. So once you're defining a universe, you're already saying that I will choose either only top 50 stocks or only top 100 stocks or only those stocks which are in FNO. So that you are automatically choosing the stock which has reasonable market cap, and you're not choosing stocks which doesn't have a good market cap, doesn't have a volume, in which you are not able to, there will be very high slippage if you want to exit and all. So the first and foremost thing is that you have to define a universe. So once you have defined a universe, you will choose maybe 3 to 4 stocks as per your convenience, and you will mark these things on the chart. That is, you will mark support and resistance. Now, these support and resistance may be based on the chart patterns, or maybe based on exponential moving average, that's 9 and 20, or it may be because of VWAP, which we covered in the last session, and you will also mark volumes in the chart. So what I generally do is, like after doing the homework one day in advance, the next day when the market opens, I generally open sensible में volume wala chart and I see which stocks. If you can see, I see the which stocks are going up with good volumes. So I choose the stocks which are like trading with very high volumes, and I generally mark these stocks to see if these stocks will offer any opportunity during the day for intraday trading setup. So just think about it. Just I have just marked the volumes. It means volumes are high. It means some big players are buying it or selling it, depending on whether the stock is going up or down. So I'm defining my universe, and I will try to choose those stocks which are going up in maximum volumes, and if they are giving good pattern also. So thereafter, what happens now? There are various strategies which are to be followed for intraday trading. So what are these strategies? So first strategy is ORB, which is known as opening range breakout. The other one is flag pattern, then ABCD pattern, and then you can mark support and resistance based on BWAP and the reversal patterns. And we also see high and low of the day. Now, important part is that generally, if you take a trade, either you will take it in the morning, that is somewhere close from 9:30 to 11 o'clock, and or after 1 o'clock. Generally, what happens from 11 o'clock to 1300 hours, market goes consolidation phase. So most of the stocks you will find they will consolidate. Like if the stock has gone up too much till about 11 o'clock, from 11 to 1, you will hardly find any movement in the stocks. So you will not, and if they are moving also, there will be a lot of whipsaws in the stocks. So it's better not to trade from 11 to 1 o'clock unless there's a very strong pattern and you have a very strong urge to take a trade, which is like some edge has come and you feel that this edge is very strong. Then only you should take a trade from 11 to 1 o'clock. Otherwise, generally you should avoid to take a trade between 11 to 1 o'clock. So we look at the first pattern, which is opening range breakout. So what happens? Suppose you have chosen a stock and now this stock has gone in a range after opening, and the range can be like from 5 minutes to 30 minutes. The stock is in a range if volumes are high, and thereafter their stock breaks out on either side. So that means that stock is breaking out from that range, and then mostly what happens? The stock will go in the direction of the trend. So like suppose you have chosen a stock and it has like you are choosing on the downside, and thereafter it has followed a range, and there's a range low and range high, and your view is also on the downside, and plus it breaks down with higher volumes. So you can take a short side trade, and you can put a pivot point which will be half of the range as a stop loss, and you can carry this trade. And your target will be initially the range width will be your target, right? And thereafter how to manage a trade we'll cover subsequently at the end somewhere in the session, that how to manage a trade once a trade has been taken. So this is the first way of taking a trade. This is opening range breakout. The range breakout can be on the upside or on the downside. You take a trade when the range breaks out with higher volumes on either side, and initially stop losses at the pivot point, which is the half point of the range. And as the trade carries on, you will try to carry on to a profit to the target, and you will manage the trade, as I'll cover later how to manage a trade. Now, the second pattern which is used for intraday trading and is very effective is flag pattern. So flag pattern is again very effective pattern which I have seen personally, and it's followed by a lot of people also. That is very effective, and especially on the long side. So when you are choosing, unless the trend is down, try to choose stocks only on the long side. Shorting a stock I have seen generally doesn't work so well in intraday trading, because there are a lot of short covering rallies also, and even when the trend is down also. So what happens? The bounces are quite strong sometimes. Unless it's a very strong downtrend, it doesn't work so well. So try to look for those stocks which are on the, like, which are giving you signal on the long side, and if the general market is also on the upside, then chances are there that you will be more successful in doing intraday trading if you are trading on the long side. So something like, if you're taking 10 trades, 8 trades should be on the long side, and maybe 2 trades where you really feel very strong that you should take a trade on the downside, you should take a trade. Otherwise, try to avoid the trading on the short side. So flag pattern is something like normal flag pattern, which we have already discussed. So there is a pole and a stock which has gone up in the morning quite a lot, and thereafter it consolidates and forms a flag pattern. And when it breaks out from the volume, then the time to go long in the stock. The stop loss will be low of the flag, and target will be as per the pattern, which is of pattern of a flag. Like height of the pole is the first target. So this is an example of Nifty only, which happened somewhere in March. So this is how a flag pattern is formed. So as you can see, like Nifty had a gap up opening, and thereafter it went up quite a lot, and thereafter it made a kind of a flag pattern. And यहाँ पे it broke out the flag, and उसके बाद थोड़ा volumes were slightly थोड़ा on the higher side. So if you see this pattern, it's the kind of a flag pattern in which it's making kind of, it's ready to break out of the upside. So it shows that supply is lacking and demand is higher, and now you have a very reasonable stop loss. यहाँ पे either low of the flag you can put as a stop loss, or in this case, like if you see, this is the low of last 5-6 minutes. So and it's likely to break out. So you can also put the low of this uh, a 5-6 minute as a stop loss, and you can take a long trade for the breakout. So this is how a flag pattern is taken as a trade. Now this is another example of a range breakout, in which this is example of TCS, in which you see in the opening itself, stock is in a range, and thereafter it consolidates, forms something sort of ascending triangle pattern, and thereafter it breaks out. So it's like, it's almost same. Technical analysis is same for all kind of time frame. So it is same for intraday pattern also. In this case, you can also call it as a opening range breakout, in which opening range breakout is taking place, and there's a triangle pattern also which is taking place, and the market breaks out on the upside. So these are the two patterns which are very important pattern which is followed. One is ORB, opening range breakout, and the other one is flag pattern. Now, if you personally ask me which pattern I prefer more, so I prefer more flag pattern rather than opening range breakouts, because in my personal experience, I have seen that range breakouts are difficult to trade because of their because stop loss is slightly wider in the range breakout. But if you see flag pattern, the stop loss is quite small. So even if you go wrong also, you take very small loss, and chances of going in the direction of the trend increases in flag pattern. So if I have to rate between these two patterns, that if there are two stocks, one is giving me opening range breakout and other one is giving me flag breakout, then I will prefer to go for the flag pattern. So these are the two patterns which I discussed now. Now I'll come to third very important pattern, which is ABCD pattern, which is also as strong as flag pattern. The only difference is that unlike ORB or flag pattern, which generally forms in the like first part of the day, from 9:30 to 11 o'clock, or maybe even at 9:20 to 11 o'clock, you will find either opening range breakout trades, or you will take trades on the base of flag pattern. There is one more pattern which is known as ABCD pattern, which takes time to take form, and generally people take this trade after 1 o'clock. So this is the trade which generally happens, which you can look for uh, about close to about 1 o'clock or so, and it also works very well. So what is ABCD pattern? Basically, ABCD pattern is there's a A wave, which is an impulse wave. So let's suppose market there's some good news and stock goes up suddenly on very high volumes. Now it did not form any pattern in between, or it may have formed a pattern and it goes up substantially up. Now what happens? There is a corrective wave, which is known as B wave. So like all corrective wave, it corrects and the correction is not as deep as the move was in the impulsive wave. So and it's a shallow correction. Volumes dry down during this period. Then there's a C wave, and what happens in C wave? The retest of resistance is there. Means the wave all try to hit the resistance again, and then there's a wave D, which is a kind of a flat wave, which gives you entry or small stop loss. And then we see there's the target for these patterns. So just to give an example, let's go with some stock. So like this is a Havel stock which form a decent consolidation pattern and then it broke out with good volumes. If you see, यहाँ पे volumes are quite high. So like volumes are quite good and it broke out with good volumes. So
Is
like
this
this,
a five minutes candle or a 15 minutes candle?
so this is 1 day candle, sir, as of now.
Acha, okay. But I thought
Sir,
intraday to up 5 minutes
ah,
or 15
oh,
minutes.
so I'm coming to that, sir. So this is 1 day pattern. So this is like suppose someone is seeing this stock and now he selects a stock. Okay, this Hebel stock has broken out from long-term consolidation range. So I will trade on the long side in this state. So this may be the part of the universe which you have created for yourself. Okay, this is a long-term bullish trade, and I'll be taking if some pattern is found in the Hebels, then I will take a trade in the Hebels. So then what happens? You go to the intraday chart, and this is the intraday chart of Havels. So if you see this, this is the 1 minute chart. So this is wave A, the first wave, which is the impulsive wave. So on that day, again, volumes are very high, and what happened? It was showing in sensible some 6 or 7 times volumes of the previous day, and there was an impulsive wave. Now this wave has not given a lot of chance to enter because there was a one-way move of wave A. But what happened was there's a wave B after that, which is a consolidation wave. And now if you see in wave B, it's a like shallow wave. And maybe if you go by Fibonacci also, it would have corrected by close to about 23% or so. So it means that okay, correction is there, but correction is not so strong. So and volumes have dried down. Like morning mein volumes are quite high, but in this phase the volumes are not so high. Then comes the wave C, which is again in the direction of the impulse wave. And what happens in this impulse wave? It goes and retests the resistance, previous resistance level, and but is not able to cross it because some people who are there sitting, they will try to sell the stock. So it comes down, but again comes down very low, very less, makes the higher bottom, and now this is wave D. Now wave D in this case is a flat wave. It can be slightly down also, and slightly upward inching also. So basically, what happens now in wave D, whatever supply is happening at the resistance level is getting observed, and every time is going down, there are people to buy it. So this is the time where an intraday trader can make an entry because D wave gives you very small stop loss. Now, why you are entering a D wave and now why some people do enter at C wave also, but personally prefer to enter at D wave because what happens at C wave you are still not very sure about it that this bounce will go how much high and it may come lower also. So at this point of time, surety is less. I will say in my personal experience, I have seen many times the pattern failing also. And sometimes you assume too fast that this is the bottom and your stop loss may get hurt. So what happens? There are two ways of entering. One is at wave D and one is at the end of wave B. The end of wave B entry is when you see higher top and higher bottom getting formed. तो जैसे इस केस में क्या था कि इट क्रॉस दिस लाइन लेवल तो अ हायर इससे पहले डाउनवर्ड ट्रेंड चला था एंड अ हायर टॉप वाज फॉर्म सो सम पीपल विल एंटर एट दिस हायर टॉप एंड विल मेक अ स्टॉप लॉस एज लो ऑफ द वेव बी so that will be a stop loss and they will try to carry it for the whole day or they will exit at wave and the end of wave C. The other people or like the what kind of trade I do is I try to enter in the wave D when I see wave D getting formed and I find a small stop loss. Okay, now some pattern is there and there's a small stop loss. So I enter generally at that point of time, जहाँ पे वो it's about to break out or has almost broken out. So generally what happens, these kind of patterns result in a volume burst thereafter because whatever supply is there has been exhausted So the stock has been in uptrend. It has been going up with high volumes. It is making a ABCD pattern, and you are entering at a D point जहाँ पे आपका stop loss is quite low. So this offers very good risk reward ratio many times, and you will find this pattern happening a lot of time. So this is how ABCD pattern is typical ABCD pattern works out. Now don't go by end of it that it has come down. So I'll cover where to put a stop loss and how to manage a trade. And this strategy generally works for all kind of trades. Now another stock like this is BHEL trade. So BHEL also like it has gone up with the good volumes, and this is the candle I am talking about. So what happened in the intraday? So this is the intraday candle. Now intraday में BHEL has gone up substantially up, and उसके बाद it's not exactly ABCD pattern, but if you see that it is kind of consolidating and somewhere close to about 13:30 or so, like from 11 o'clock to 1 o'clock, it is consolidating, and uske baad it start inching up again. So you are not trying to guess any bottoms. Only thing you are like making a range, and if the range breakout is there, then you will assume because the direction of the trend is up, it's going up in good volumes. It means people are accumulating this stock, and chances of breakout will be very high. So again, when you find a small stop loss, so you can count number of waves A, B, and somewhere C, and uske baad this D wave is slightly complex in this case. But if you are getting coming close to 1 o'clock or so, and you find okay the D wave is getting formed, and you can expect a breakout on the upside. So these are the main patterns. I will say these are key patterns which you have to work for intraday trade. Don't go for more patterns. हालांकि every kind of pattern works. Like if you see inverse head and shoulder pattern, if you will see continuation pattern, most of the patterns which work for swing trade, they also work for intraday trade. But these three patterns are the most important ones, and you should try to follow these patterns if you have to trade on the stocks. And as I covered earlier, try to look for stocks which are giving signal on the long side rather than stocks which are giving signal on the short side. So apart from that, you should also keep a lookout for stocks which are making new intraday high. So you will find uh, uh, many stocks if you have a stock in your watch list and you find some stock which is making a new intraday high, so chances are there that stock will continue to move higher. So wait for some continuation pattern uh, being formed there, and thereafter which gives you good risk and reward ratio, and thereafter you can go long on that stock. Similarly, thing can happen on the stock which is making some new intraday low. So when you see a stock making new intraday low, so chances are there that it will continue on the downside because the selling pressure is high. And again, you look for continuation pattern in these kind of stocks. Go short if risk reward is favorable. So given a choice, I will choose a stock which is making a new intraday high rather than a stock which is making new intraday low. Apart from that, we also covered a strategy known as gap up on very good news and gap down on very bad news. So what happens uh, sometimes because as we have covered earlier that market discount all news, and market start discounting the news so well in advance. So for example, let's suppose had the market been going up and there would have been a pre-election rally and market is already sitting at 24,000, and now BJP comes in power, or whatever market is expecting a stable government, the stable government comes in power. So what happens? Market is a gap up opening, but very likely will happen that this gap up is already discounted. Means all the good news is already in the price, and market may make a top and starts coming down. So this is but what happens? You have to wait for a signal. So sometimes you'll get a signal which will give you small stop loss and will give you entry point. So there may be a topping formation which will get formed, something like as I covered earlier, lower top or lower bottom, or some head and shoulder pattern, or a range breakdown, something like that. Reversal pattern will be there. So you can go with that reversal pattern, and sometimes these tricks are very rewardable. Same thing happens on a gap down also, when market is already fallen or a stock has been beaten down very badly, and now bad news comes. So that bad news may be the bottom of the stock, and thereafter it can recover from there. So many times it has happened that there are many stocks which are beaten down quite a lot, and then the results come very badly. So on the day of the bad results, it has a gap down opening, but that gap down itself becomes a bottom for next 2-3 days. So there's a opportunity for swing trade also. and for intraday trading also. And these kind of trades are sometimes very rewardable because उनका फिर movement is quite a lot. If you are able to catch the trade at the right point of time, the movement can be easily about 2 to 3. I will say कि first and foremost I will try to go for flag pattern. Then second I'll put ABCD pattern in the important patterns. Then I'll go for range breakout, and then I will go for this gap up on very good news and gap down on very bad news. And the last may I will, if I have to prioritize, I'll prioritize a stock which is making intraday high or making a intraday low, giving a continuation pattern. But most likely I will go for flag or ABCD pattern if I'm able to see a stock forming these kind of patterns. So this is about intraday trading. However, there are certain rules for intraday trade. We will just go through. So first and foremost is that you should not take more than 3 trades in a day. So what happens if you restrict yourself to 3 trades? So there will be more likely that you will trade only favorable setups. Otherwise, what will happen? You will try to take a lot of trades, and you will not take those. You may end up taking trades which are not giving you best setups. So you have to understand that there are 6 hours in a day, and in 6 hours, there's a lot of time in 6 hours. So those who are interested in intraday trading, they should understand that 6 hours are quite a lot, and there's no hurry to take a trade. So always look for setups which are giving you very good risk reward ratio. And if you have patience to wait for the setups, then you will get those setups. It's not that they don't happen. Every day there are certain stocks which will get play, and every day there will be some stocks which will give you patterns. So trade only those favorable patterns. Try to not to trade between 11 o'clock to 1 o'clock unless there's a very strong pattern asking you to do that. And because this is a time where volumes are low, so chances are whipsaws are more. Most likely your stop losses will get hit, and market will reverse after your stop loss will get hit. Now try to avoid monitoring profit and loss, because what will happen when you start monitoring your profit and loss, so you get psychologically influenced by seeing your profit and loss. So try to avoid monitoring your profit and loss. उससे क्या होगा? You will be more balanced about your approach. Have your target in mind, have your stop loss in mind, and then you take a trade, and try not to watch your positions. And once you have put a stop loss, so never widen your stop loss. So sometimes it will happen that you will feel okay, my stop loss may get hit and market may reverse from there. So it's okay, let your stop loss get hit. If market goes up again and again gives you some opportunity to take a trade, then again take a trade. But don't try to widen your stop loss. What will happen? You will widen your losses, and once you get into habits, एक दो बार ऐसा होगा कि you will widen your stop loss and your stop loss will not be hit and market will reverse from there, and you will feel happy about it. But over a long period of time, it's a wrong thing to do, because by the law of probability, it will also happen that you will widen your stop loss and your stop loss will get hit, and you will take even more loss than what you were supposed to take originally. And once you get into habit of changing your stop loss, you can always change it again. Like it goes down again, you can always move it further lower. So never get into habit of widening your stop loss. If you have put a reasonable stop loss as per your patterns and as per whatever market had given you support and resistances, then never change your stop loss. Now you will take a trade on trade patterns, and some people use trade patterns. Many people use EMA 20 and 9 minutes also. So they put 20 EMA and 9 minutes as a simple moving average or exponential moving average, and they also follow the pattern of moving averages for taking a trade. So moving average is same which we have covered earlier. If there's a crossover of 9 to 20, then people will take long side. If the 9 is crossing from the down, and if 9 is crossing from the upside, then people may take a trade on the short side. So principle remains same. Only thing, earlier in the longer time frame, you are using 9-day and 20-day. In this time, you are taking 9 minutes and 20 minutes of time frame, and you are taking trade based on the crossover of moving averages. Now remember one thing, that if you take a good trade, the sign of a good trade is that it will shortly move into profit. So if it is not moving into profit, like once you have taken a trade and उसके बाद वो जल्दी से profit में नहीं जा रहा है, so chances are there that you may not have taken the right trade, or you may have made a mistake in taking a trade. So this is a sign of it. If you are taking good trades, then chances are there that within few minutes or within 5 to 10 minutes, you will see yourself moving in profit. And if it's not moving in profit, then chances are there that your trade may go wrong. So these are the few signs and few rules of intraday trading. Now we'll come to the part in which we'll discuss about trade management. So till now we have just discussed all the entry points. Till now we have discussed how to take an entry and how to put a stop loss in your trades. But today we are discussing how to manage your trade to be more consistent trader. So what happens? Whatever position you are taking, always divide your position into three equal parts. Okay. So like suppose you are taking shares. Suppose you have bought 300 shares. So you make it like that. Okay, I'll buy something in three parts. So if you're buying a stock, buy 300 shares or 3,000 shares or 30 shares as per your capital amount. And so what will happen? Now only two things can happen. Either it will go in your direction or your stop loss will get hit. So if your stop loss will get hit, you will, as such will be out of your position. But suppose your stop loss doesn't get hit and it moves in your direction. So what I have seen most of the times, if you have taken the right trade, first even if the trade goes wrong subsequently, in the initial move, the trade moves in a direction. So whenever the trade moves in direction impulsively, take one third out from that position. So suppose you have bought 100 shares, take out 100 shares once you have got some profit out of your position. Okay, but you're not changing your stop loss. Your stop loss is at the original point as per the pattern or as per the support you have decided. So whatever the let it be candlestick pattern or let it be the other pattern which is there, or maybe EMA or VWAP. So as per your initial setup, your stop loss doesn't change. Now what will happen? Either again your stop loss will get hit or it will go to your target. So once it goes to your target, book the second, like one third part you had booked earlier. So now sell the other 100 shares also, which was you're supposed to sell at the target. Now you are left with only 100 shares, which were the last 100 shares. So try to carry this 100 shares as long as possible with a trailing stop loss. Now this trailing stop loss can be a swing low, which is like if a stock is making higher high and higher low, then you can keep on revising your stop loss at the low. It can be VWAP or it can be moving average system. So whatever system you design, you can use that system, but try to carry this last part as long as possible. So in my experience, I have seen that maximum money will be made by this last part. Like what will happen is sometime what happens, there are very trending markets and the stock keeps on going up and can this one part can give you substantial money. And the most important part is if you follow this methodology, then you'll be highly consistent. So it will enhance your consistency in the system and this will help you to become psychologically more inclined towards psychologically better in trading and psychologically better to be a consistent, successful trader. So this is very important to follow, and you can follow this system in all kind of trades. What will happen? It will help you psychologically to carry your winning trades also. It will help you psychologically to cut your losses also, and your profitability percentage will increase quite a lot. Because what will happen? The moment you take one third out from that position, so what happens? The total risk is now less because पहले 300 शेयर का stop loss could have been hit. Now only 200 shares का stop loss will hit, जिसमें से some part you have already booked. So your loss will be lesser. And the third part is that your maximum profit can be given by the last one third part, which you are carrying for as long as possible. So this is how you're supposed to manage your trade, and it's very important to follow these rules if you want to be a consistent, successful trader. It will help you quite a lot in being a consistent trader. Now, many times people say that there is no holy grail in the market, but there's a holy grail in the market. So what is the holy grail in the market? That holy grail is that have patience to wait for a small stop loss. So it means that first thing is कि always wait for the setups, always wait for those entry setups जहाँ पे आपका stop loss is very small. Just a sec, someone is there on the door. I'll just enter, see who is there and come back. Yeah. So I was coming. Many times people say there is no holy grail in the market, but the holy grail is first and foremost is have patience to wait for a small small stop loss or have patience to wait for an entry setup. So that's the most important thing. So 50% job is done if you are have the patience to wait for these setups to appear. Most of the time what happens, people don't have the patience to wait for the setups, and they are inclined to, those who are into intraday trading, they are inclined to take trades in the first, like it's like fastest in the first type of thing. So try to understand that there are 6 hours, and in 6 hours there will be a lot of opportunities if you are an intraday trader. So you'll find a lot of opportunities. Only thing you have to wait for the right setups. Now, second most important thing is, once you have taken a trade and the position moves into profit, then mostly what people do, they take off the trade. In the sense, they, to get the feeling of winning, you are not able to you're not realizing full potential of the trade. So what happens, थोड़ा सा profit में आता है and people exit. So have patience. Second thing is, have patience to carry your winning trade, and that will happen if you follow the rule of trade management, in which you are supposed to take 1/3 off as the market moves in your direction, and you carry the second part till the target, and you carry the third part as long as the market keeps you in the trade. So I will say that it's easy to master the rule number one, because that comes with practice, and it is very difficult to master the rule number two. Means most of the traders I find, they find it very difficult to carry their winning position. So and even the first rule is difficult to master, but comparatively I will say it's easier to master, because uske liye सारी methodology is there and you can follow that thing. And with experience you'll be able to have the patience to wait for the setups which give you small stop loss. But to master the second rule is more difficult. You have to work upon that. That once you are into winning trade, don't come out so easily out of it. Okay. So this was all about intraday trading. Anything you want to know about intraday trading, you can ask me, and we'll go to momentum trading after this topic. Okay. So we'll go to the next topic, and you can ask me at the end of session also, or later on also, anything, any doubt is there. So we go to the next topic, which is momentum trading. So momentum trading, I have put this topic because it's a bull market, and in the bull market, this momentum trading strategy works quite well, and it is less tenuous because it is not an intraday trading sort of thing. It's kind of a swing trading sort of thing, and it can give you some, your portfolio can outperform the normal market if you follow the momentum trading strategy. So what is momentum trading strategy is? It's an investment strategy in which you are buying an asset that has shown a significant movement in price as well as volume. So it's the same thing which we do in technical analysis. We buy high and sell even higher, and it's a trend following method. So there are certain indicators, certain methodology which people use in these kind of things, and substantially rewards are also given. Now, some of the famous traders who are momentum traders and who have actually made a lot of money is, one of them is Mark Minervini. He presently also is a momentum trader, and his performance has been substantially better than many traders. Other one was Jim Simons. If you know about Jim Simons, he produced close to about 63% returns, and he was also a momentum trader driven by a lot of data, and because he was a mathematician, he used to use a lot of data to find out the stocks, and his performance was also good, and mostly his performance was based on the momentum trading. So advantage of the momentum trading is that it offers high returns, but anything which offers high returns is also high risk strategy also. So only those who are ready to take that high risk should follow this kind of strategy. But it works it works very well in the bull market, which we are currently going on. So again, what happens? How to carry out momentum trading? So it's something like, again, what you do for intraday trading. First and foremost is your stock selection, and you can only be as good as the stock you choose. So you can define a universe that, okay, I will define my universe in the like maybe Nifty 500 stocks. I will define my universe, and in those 500 stocks, I will choose the stocks which are trading in the topmost band, or making 52 weeks high. So you will choose those stocks which are making 52-week high or are the topmost band or are likely to break out. Okay, and this should be large cap or mid cap, and should not choose stocks which are small cap. And now you have to choose a stock having low standard deviation. It means that market, it should have been in a range bound method from a decent amount of time, something like which is ABCD pattern. So stock should be something like of ABCD pattern or some contraction pattern from a decent amount of time. And decent amount of time means something like 2 3 months or something like that, and thereafter it breaks out with higher volumes. So these are the stocks which you choose. Now, something like Havels, if you see some time back, I'll show you the end of the day. So Havels made an important pattern, something like that, BCP pattern, and thereafter it broke out and then made substantially higher move. So important part is that these, even if you see Voltas also, I'll show some chart of Voltas also. So that also made a volume contraction pattern and then it broke out with good volumes. And thereafter these stocks can run up quite a lot, in the range of 30 to 50% also in a very small short time, giving your higher returns. So something like this, you have to see that stock must be something like making a contraction pattern in which volumes are like there's a pullback and volumes are low, and it makes a higher high and higher low, and then it breaks out of the higher volumes. So it's the same thing which you are doing in intraday trading or any other form of trading. Only thing your horizon is bigger, and you are choosing stocks which are at the topmost band. It means which are about to make 52. We are at 52-week high or in the topmost consolidation pattern, and they are going up with good volumes. So this is again a stock example of a stock in which the stock is making a triangle pattern and then it breaks out with good volumes. So you buy this stock and not with the intraday type of time frame, but with a time frame of about close to about 6 weeks or so. That okay, you will carry these stocks for 6 weeks or so, and you will carry you hold these trades. So these are the all entry setups. Entry setups almost remain same, which we have discussed in various technical things, that you have to wait for these patterns to appear, and but you are choosing the stocks which are in the topmost band. You are not choosing the stocks which have fallen by 20-30% or something like that. You choose a stock which is in topmost band and is moving further higher after consolidation. It has finished its consolidation and now ready to break out to the next box. So there can be various consolidation patterns which can give you smaller stop loss to entry. Now, many times people feel that why you should buy a stock which has already gone up so much. It's better to buy a stock which has not gone up or has corrected substantially. So, but you have to realize that many times it has happened that stocks could have gone substantially up, but uske baad it can go even much more substantially up. Okay, so this is the example of a stock like just example that it when it was the topmost band at this place, people would have thought that it's already gone up too much, it will not go up too much. But in momentum strategy, you are going for those stocks which are giving you momentum, and these kind of stocks can give you substantial return over a small period of time. So what happens? How do you now carry out momentum trading? Like how do you do it completely? So first thing is stock selection, that you have to keep on looking for those stocks which are in the topmost band and you feel that there will be momentum in these stocks. So you have is something like if you have to create 20, you are looking to create a portfolio of 20 such stocks. Okay, so you can allocate 5% to each stocks, or if you are trying to create a portfolio of 10 such stocks, so you will allocate 10% to each stocks. The important thing is that once you are choosing this portfolio side of thing, so it has to be all diversified companies. It should not happen that you have chosen all IT companies or you have chosen all auto companies. So if you are choosing a stock, suppose you are choosing autos, then choose if you have like 10 stocks and you want to choose, maybe you can choose 2 stocks of auto and rest should be not be of auto industry. It should be of some other industry. So holding period, as I covered, can be 2 to 3 months and it can give you decent returns. Uh, then generally what happens, you book profit, you keep a target for in momentum strategy, you put a target of 30% or till the time you feel that momentum is winning out. So if you reach 30% and you exit, is fine, or you can still may feel like carrying it because sometimes what happens, the stock doesn't stop at 30%. It may give you even give you 100% or 200% returns. So I will suggest that follow the path of 1/3 wala thing. If it hits 30%, then something which is profitable don't come out so easily. Take out maybe 1/3 of it. I carry the 2/3 with a trailing stop loss, in which your stop loss is below the swing low, which has been created by the stock. So once you're entering a thing, you should realize that because these kind of stocks moves quite a lot, so you have to keep a wider stop loss, somewhere close to about 10% or so. So once you're creating your world universe of your portfolio, uh, have this thing in mind that if you're following momentum strategy, your stop loss has to be slightly wider because the volatility is quite high and it can move 5%, 10% easily. So you have to choose those kind of stocks. Review these stocks every week or 2 weeks. Like, don't try to change every day. Maybe at the end of the week you can decide, okay, now let me see what is the pattern getting formed. Is the pattern still strong or the pattern is getting weak? And whether I should hold my portfolio or whether I should churn my stocks. So if you find after 2 weeks or so there are certain stocks which are underperforming or unka pattern has broken down and they're not doing so good, so that cut those underperformers and put those stocks which are doing well. In some like if you have found some other stock which is breaking out with good volumes, so buy those stocks and cut out those stocks from your portfolio which are not doing well, so which may be in loss. So generally again what I've seen people do other way around, कि जो स्टॉक प्रॉफिटेबल है उसको बुक कर लेते हैं एंड जो स्टॉक लॉस में है उसको रख लेते हैं कि थिंकिंग अबाउट इट समडे इट विल रिवर्स एंड आई विल कम आउट फ्रॉम माय लॉस. But you are not understanding that you are actually investing in the your bad performer by keeping it there, and you are not, it is not helping you in coming and going to the right stock, and you are just doing the other way around कि अपना profit आपने जल्दी cut कर लिया and you are holding on to the losers. So this is what you are not supposed to do. You are supposed to cut your stocks which are underperforming and go to the stocks which are performing or are giving fresh breakouts with volumes. This strategy works very well in bull market, but doesn't work so well when the bull market changes. So what happens if you see that in your portfolio, your stop loss are being hit often? So chances are there that trend may be reversing. So you should exit this kind of, you should either scale back, suppose whatever your size is there. If you're holding 10 stocks, cut your portfolio by half size, maybe only 5 stocks, and wait for the right opportunities. So once the market turns back again, you'll again find opportunities. Jahan pe again there will be some momentum stocks, which will give you some good patterns, and you can go to these stocks and create your portfolio in these stocks. So this is how momentum strategy is carried out, and a lot of people are carrying out momentum strategy because and are successful in last 2-3 years because it's a bull market, and as of now, bull market has not given any sign of changing. So this strategy can still work for some decent amount of time till the time trend is intact, and people can look into it. So now we have covered two important strategies: intraday strategy and momentum trading. So now we come to some other aspects of trading, such as risk management and position sizing. So which is again a very important thing. Now important why this risk management position sizing is important is there are many kind of traders, all using different kind of strategies as per their psychology, as per their personality. So different people can be used different things. Like some people will be trend following and be successful. Some people are contrarian trader and still be successful. And some people use option trading. Some people use trending market trading. Some people use fundamentals. They all be successful. The key part is all these traders who are successful, they follow the risk management strategy. Is a very important thing. So if you follow the risk management, I will say it's another holy grail in trading, that you should manage your risk very well. So you have to understand that even if you are 50% right and your risk reward ratio is 1:2, then also you will be successful. And if your risk reward ratio is 1:3, even if you're successful only at 40% of the times, then also trader will be profitable. So important thing is you have to manage your risk well, and you have to look for patterns which will give you better risk reward ratio. Risk reward ratio मतलब कि suppose आपका stop loss is about 10 points, तो आपका target should be close to 30 points. So pattern should be something like that. You are waiting कि okay मेरा अगर risk is 10 points, जो अगर if the trade works in my favor, so I'll get minimum 20 points or 30 points. It should not be less than 1:1. मतलब ऐसा नहीं होना चाहिए कि 1:1 है. It should be minimum 1:2. When you are looking for a pattern, at least 1:2 का pattern का target होना चाहिए. Then only take a trade. If you find that okay this is not giving you 1:2, it's better to avoid that trade. Okay, because it longer term में profitability will not be towards your side. So just to give you an example, like suppose even if you take just 20 trades in a month, 20 trades means 20 days in a month. So even if you take just one trade in a month and your risk reward ratio is 1:2, you only take those trades जहाँ पे risk reward ratio 1:2 है, and you have 10 wins and 10 losses, then also you will end up making about 10% return per month for your portfolio size. So you have to understand this thing, that even with 50% win rate, you can generate 10% of return. And even if you have 40% win rate, then also you will generate 4% return agar your risk reward ratio is 1:2. So this is the difference of, like, this is what you have to understand कि in any trade, एक तो your position size should be important, And second thing is, never your risk when you're taking a trade, just calculate your risk and reward. Where is my stop loss and where is my target? Is my target as per the pattern is at least giving me more than 1:2? Then only take a trade. Otherwise, if it's not giving you 1:2, then don't take a trade. Okay. Now, other thing comes about position sizing in a trade. So again, it's a very important thing. What should be a position size of a trade? Never risk, uh, never risk more than 1% of your capital. So whatever trades you are taking, should have a stop loss, thinking that my if it goes in loss, I will not lose than more than 1% in this trade. For example, suppose if your capital of 2 lakh, so risk per trade should not be more than 2,000. If your stop loss is hit, you should not lose than 2,000 in any one of the trade. So this is how you're supposed to do the risk uh, position sizing of the trade. So whenever you're taking a trade again, apart from the risk and reward ratio, always think if the trade goes against me. So my push, am I more? You have to question yourself: am I not over investing in the trade? So have a methodology in which you will determine yourself कि whatever happens, how strong may be the edge. Edge may be very strong. You may be very much inclined to take that trade. कि नहीं यार ये तो होना ही होना है. You know, I have seen so many times this is bound to happen. Understand that market can do anything. So always have your position size intact. Okay, no, I will not take. I'll not increase my position size more than this. Over a period of time, when your capital, your portfolio grows, so automatically what will happen? Your position size will keep on increasing as per the portfolio as the portfolio grows, and as the portfolio goes down, the position size will keep on reducing. It means you are doing something wrong. So you have to work on those things which will help you to become better as a trader. But never try to increase your size of the bet which you are taking. So there are certain rules of risk management which you have to follow. That as I covered, the 1% rule, that you should not lose more than 1% in one trade. Then never average your losing position. So many of the beginners trade, they try to average their losing position. कि अगर dip आता है तो they will think नहीं नहीं finally तो this is very good stock and this is bound to go up and fundamentally also very strong. So they add on to the losing position. So never add into a losing position. There have been many big firms. एक जापान में फर्म था, I don't remember the name exactly. So he was trading index, he was taking position in the index, and index में he was trading futures में. उस टाइम पे ऑप्शंस कम हुआ करते थे तो futures में he was trading. So he took market corrected 10% and he took a substantial size in the index, thinking that index will not fall more than 10%. 10% already fall हो चुका है. But it's about Japanese market and everyone knows that Japan market crashed quite a lot. But the Japan, what happened? The index crashed another 10%. So market corrected 20%. So now he thinks कि 20% market correct हो गया है. अब 20% तो historically बहुत ही कम correct होता है. 20% is a very good chance कि यहाँ से bounce तो आएगा ही. So he doubled his position. And a lot of banks were invested with this hedge fund because he was giving decent returns. And finally, what happens? That market kept on going down, and he has to liquidate and square off the positions. And finally, the bank became bankrupt. So sometimes people feel, and just imagine how much amount he had in his portfolio, that whole bank of money he was using. So sometimes people feel कि मेरे पास like I have more money, so I'll always average down and I can handle things. But try to understand that you should never add on to the losing position. If you are, bulky, I will say it has to be other way around. Something like if you are familiar with futures and options, so that can help you out. Suppose your stock is going down, you feel ki, okay, I want to hold the trade, so you can sell some call options. Never try to add into the position. Those who are familiar with future and option, they'll be able to understand it. But what I mean to say is, if some stock is going down, don't try to buy it more, thinking that it will go up. Like suppose it may be stock like SBI की यार SBI तो अच्छा ही stock है, SBI डूब गया तो पूरा इंडिया डूब जाएगा, but don't do that. So this will change your trading style quite a lot. If you stop doing it, you will find a lot of difference in your trading performance in the time to come. So as I covered 1% rule in one trade, so never lose more than 2% in a day. If suppose you are doing intraday trading, so you should not lose more than 2% in an intraday trading. And as I covered earlier, always take a trade minimum reward of 1:2. Never take a trade which is not giving you reward of 1:2. Then another important thing which will help you quite a lot in your trading journey is maintaining a trading journal. So whatever trades you take, okay, always maintain a trading journal. Trading journal can be very simple or can be complicated as per your personality. But important part is that you should write what kind of trades you are taking, what is your entry and exit, on the what basis you are choosing your entry and exit, what was the result of the trade, what are the mistakes you made when you trade a trade, and what are the lessons you have learned. So these are the very important things which you have to write. And what happens? See, you may think that I will remember these things and it will go into my mind, but it has been proven psychologically once you write something, so it makes an impact in your mind. So always, even if you are a swing trader, you may be an investor, you may be a intraday trader, you may be option trader, whatever kind of trading you are doing, is very important to maintain a trading journal. Depending on your kind of trading, you will maintain a trading journal and you will see the difference. So, like, this is an example of how a trading journal is supposed to be maintained. It's a very simple example, but it can be more elaborative or it can be even lesser than this. But important part is that you should write what are the mistakes made by you and what are the lessons learned by you. So you will realize that over a period of time, you because you are writing, because you have to write in your journal, so that thing will be in your back of your mind, and that will help you in preventing mistakes. Because if you take a trade and you are breaking the rules, so in your back of mind, you know that you have to write it today. So you will not break up the rule. You will follow the rules which you have made. And if you can do, once you have made a mistake, once you have written in your trading journal, never repeat your mistake. Okay, that is also very important. Make some new mistake. Okay, but don't repeat the mistake which you have already made once and you have learned your lesson. So you have learned a lesson, you have paid a price for that. You may have taken a trade and you may have taken a wrong trade, and you realize, okay, I was impulsive and I maybe I entered earlier than what I supposed to do, and I did not wait for the pattern confirmation, and that because of that my stop loss was hit. So once you have made that entry into your journal, don't never repeat that thing again. Make some new mistakes. Okay, maybe the volume breakout was not there and I entered into a trade. So you will make an entry. Okay, I entered into trade without confirmation of volume, something like that. So, or like you did not manage your trade well, you exited too early. So you enter that thing. Okay, I exited as the stock moved in profit. I exited. I did not follow the 1 by 3 wala rule. So you enter that thing into it, and every time write what are the mistakes made and lesson learned. So over a period of time, some mistakes because of your personality you will repeat for some time. But if you keep on writing your journal and if you keep on putting it daily, you will realize that you gradually what will happen, your mistakes will get eradicated or they will reduce quite a lot, and that will take you to the path of journey towards being a consistent successful trader. So this is just an example. Let's say suppose I have gone along on Tata Motors some point of time, and what was the pattern setup was? It was a flag breakout pattern. Result was okay. I ended up making 11,000 rupees, but what happened? I could not take the trade for too long because my trailing stop loss was too close. So what happened? Instead of I should have kept it a slightly wider, because of which my trailing stop loss got hit, and substantial profit I could not take. So this is just an example that how can be a trading journal. It can be as per your rules and as per your. It can be very elaborative also, but you have to maintain a trading journal all the time. Now, certain miscellaneous points which you should remember when you are going to trading or investment, take it as a business. You should have a business mindset. And once you do a business, you have to remember that business is perpetual. Like once you are opening a business, you are not opening it for 1 month, 2 months, 3 months, or 2 years. Like if you open a business, something like clients, you know that even if I go, that business will keep on running. So something like that, you have to think from that mind frame that you are doing a business and you are playing for a very long haul. You're not playing for short haul. So whatever your rules and whatever decisions you are taking, that is should be supplementing for long term and not for short term. Now also remember that any business you do, mostly businesses give you profit somewhere close to about 20 to 30% per annum, and it's easier to maintain even in stock market also. You should aim for 20 to 30% per annum is a very good returns. But what happens? People think that stock market is a place where you can make a lot of money, and they try to make more money. Now, what happens when you try to make more money? Making more money is extremely difficult. Like making higher than 20-30% returns is extremely difficult. Like people like Warren Buffett also has made huge amount of wealth just by compounding his compounding returns at 22 to 23% per annum. So 22 to 23%, 30% is a reasonable return. I will not say very good. I will say it's a very good returns actually. If you are able to do a CAGR of 20 to 30%, you will make phenomenal amount of wealth. Now understand, even if you are growing at close to about 20% per annum, your money will become 10 times in 10 years and 100 times in 20 years. So sometimes people don't realize it. Sometimes people say, I bought a flat and in 5 years it has doubled. So actually, it's not that it has given very high returns. It has given close to about 16 to 14%, 16% के आसपास close to returns. And if you are generating 20% returns, you will realize that even in just in 10-year time frame, your money will become 10 times, close to about 10 times. And if you are able to generate it close to 20 years, your money will close to about 100 times. So 20 to 25% is a reasonable expectations. You should expect that if you are able to do it consistently, you can be immensely profitable. And problem is that people try to make high returns, which is not so feasible for a long-term point of view. So think from a business point of view, do that thing. Now, 52-week high theories, always look for stocks which are making new 52-week highs. This I have covered a lot of time, that always look for strength and not look for stocks which are making new lows or making 52 lows. So chances are there that 52 low stock may bounce, but that bounce may not sustain for too amount of time. Like something like SDFC Bank made a new low, it bounced from there and went to 1550, but again has sold off. And other stocks which are making 52-week high, something like Indigo, something like IRCTC, or something like SBI, so they have gone up, they are still going up. So you have to also look for always look for stocks which are making 52 weeks high and try to trade in or invest in those stocks. Now, it's a very demanding, trading is a very demanding thing, and it will test your nerves. So it's very important to do daily meditation in the morning, which will calm your nerves and it will help you taking better decisions. Even while trading also, if you find that you are not able to take decisions right, so take long breaths, which is akin to calming your mind. So take long breaths. What will happen when you take long breaths? So it will calm your mind and it will calm your body, so you will take better decisions. So whenever you're feeling that okay, something maybe you're getting overexcited or something, few things are not going right, so always take calm breath at during the time of trading. So it will soothe your nerves and it will help you in taking better trading decisions. And this is last time. This is taken from Darvas. So Darvas was a person who used to trade only the box pattern and only those box pattern which are using at the topmost bracket. So it says that, and it is a line followed by Mark Minervini also, which is a trend, which is a momentum trader. So there's no business in playing with stocks which are not trading in the topmost bracket. You will realize that it's better to trade in those stocks which in the topmost pattern and giving you favorable risk and reward ratio. So chances are there that you will make more profit in those kind of trades rather than trades in which stock has corrected substantially and thereafter is giving some pattern. So few things like few my personal example, like suppose there's some stock which is consolidating just below a resistance, like something like suppose Nifty is there, Nifty का resistance is 23,000 के आसपास resistance है and it consolidates at 23,000 22,800 for a decent amount of time and maybe in a range of 22,600 to 22,800. So most of the times I've seen that breakout is on the upside. So if some stock is consolidating just below the resistance, so इसका मतलब है कि resistance से पहले ही वहाँ पे whatever supply is there is getting exhausted, and if some flag pattern is getting formed or some pattern is getting formed there, the chances are very high that it will break out on the upside. So you can also just observe it or keep it in your thing, whether if you find a stock consolidating just before a resistance, so chances are there it will be a breakout. Now, apart from trading, you should always have a core portfolio. Now, try to understand this part of it. Trading is for short term. It's like business mindset. But most of the money, most of the wealth is created through long term portfolio. So, though the knowledge of technicals helps you in doing technical trades, but long term compounding के जो results हैं, उसको beat करना तो आसान नहीं होता है. So, don't jump so often. Have a different portfolio for your trading. Have a different core portfolio for your long term. And long term portfolio को don't sell it so easily. Don't think that okay, elections आने वाले हैं तो मैं बेच देता हूँ. ठीक है, over a period of time, long term portfolio will give you substantial returns if you keep on holding that long term portfolio. So all these asset class, let it be gold, let it be real estate, let it be stocks. See, if you hold them for long term, at least they will give you the returns which generally they are supposed to give. Suppose gold will give you 8% के आसपास CAGR in long term, because which it has been going from last so many years. Real estate in India is giving close to about 13 to 14% CAGR in the long term. Equity market is giving you close to about 14% CAGR in long term. Still, many people will not able to realize that potential because what will happen? They sell their portfolios or they sell the assets. So don't, if you hold an asset, there may be some short-term dips and all, but जो हमारा आपका जो core portfolio है, उसको you should not sell it. Try to hold it and keep on holding it forever, and only sell it if you really want to do something from that money. Now, apart from that, have a trading portfolio from portfolio apart, which is separate from your core portfolio. जिसमें you can use stocks and you can use derivatives to enhance your portfolio returns. Even for core portfolio also, if you have good knowledge of derivatives, you'll be able to enhance your core portfolio returns by use of derivatives. So I will say important, it's very important to have knowledge of derivatives, which I'll cover subsequently also, which can help you in enhancing your returns. Use technology for your advantage. आजकल बहुत सारे tools ऐसे आ गए हैं which will help you in enhance your performance, such as Steak है, Sensible है, Skinners.in है, which will help you in shortlisting the stocks which you want to choose. So even if you're a technical trader, there's something known as Steak. Steak में you can go for chart patterns, and you don't have to look for chart patterns. उसके अंदर already बने हुए हैं कि okay, आज how many stocks are making bullish engulfing pattern, or how many stocks are making triple top. Even it can also show you flag patterns also. So use this technology, so you will have better hand. Instead of looking for yourself for a stock, you have a ready-made answers to okay, these are the flag patterns getting formed. Then you can choose, okay, if I have to trade a flag pattern, then which stocks I will choose. So of course you will choose the one which is giving you the best pattern out of those 4 5 stocks. So use technology for advantage. It can help you in finding out. You can also look for stocks which are making 52 weeks high. So this is what I follow. I always keep a lookout for stocks which are making new 52 week highs for my investment also and for trading also. So I believe something which is making new 52 week high, chances are there it will keep on going up in that direction for a decent amount of time. So always keep a lookout for stocks which are new 52, which are making new 52 day high, 52 week high, means yearly high. And if you get some pattern and if you are convinced about it, then you can invest in those stocks or you can trade in these stocks. Now, certain miscellaneous point. So these are that read charts every day, okay, and keep adding the stocks in your list of the stocks which you're reading. So what will happen that over a period of time you will have a decent knowledge of decent stocks, because you are if you're adding even one stock every day or two stock in a week or three stock in a week, so over a period of a year or so you will have a decent knowledge about stocks. So always try to add stocks in your list of universe in which you try to read the different stocks. What will happen over a period of time, you'll have different stocks which you understand very well. Okay, so when you take a trade, four things can happen. One is small profit, okay, which is okay. A small loss if your stop loss is hit. Big profit is sometimes you have a stock running in your direction and you carry your stock. And the fourth thing is big loss. So all you have to do to remain profitable in the stock market is avoid this big loss. Okay, never be in a position जहाँ पे you go into a big loss. Let it be trading or let it be investing. So try to avoid this. So cut your position if you find well in time that your trade is not working. Okay, this will only happen if you average the losing positions, or if you take the size which is very big. If you avoid this fourth wala part, this is something like if you are playing cricket, so आप out हो गए. अब out हो गए तो you cannot do anything. So it's better to take singles, doubles, and occasionally hit fours, but never go for risky things. Okay, so this is very important. Don't avoid this big loss and everything else will be fine. Okay, don't trade in first 4 5 minutes. Okay, if you are doing intraday trading, and it's not the fastest fingers first game. So there are 6 hours in our trading every day. So you take your time and then only do a trade. Now, important thing is choose a good discount broker. So there was a time when ICICI Direct was the major broker, and everyone used to have account in ICICI Direct. But now there are full-time discount brokers like Zerodha, Excel One, which gives you much better services. So it's better to go for these kind of brokers, because overall you are doing a business and it's better to cut your transaction cost. So the more transaction cost you cut, better you will be in your business. Have a decent trading station, have a decent internet connection. If you are into intraday trading, then at least it's advisable to have 2 internet connection, so it will give you redundancy. Never carry your intraday trades to the next day if you are taking, and especially the losing ones. So there's a tendency ki, okay, stock is in uptrend and I have taken this position. If you had taken the position for intraday, then you have to exit on intraday only. Don't try to carry your position for overnight thing. So this is the rule of intraday trading. See, whenever taking intraday trade, don't carry your trades, especially and more especially if the trade has gone into loss. Okay. Develop trading skills. Okay, and strategies I have already covered. Don't try to create new strategies. Okay, these strategies and these things which you have covered are more than important. important thing is to develop a training skills which will come with time. Something like swimming में जब तक आप जैसे आप स्विमिंग करना शुरू कर दोगे धीरे धीरे करके आपकी skills will keep on improving. First you will be struggling, धीरे धीरे करके automatically what will happen, you become better and better in swimming. There are a lot of things, a lot of platforms which give you paper trading or simulator trading. So practice, even if you have a, like if you're not convinced about few trades, or even if you're convinced about few trades, do paper or simulator trading and record those things. Make a journal for that trading also. So what will happen? Once you do a simulator or paper trading, you will, instead of, it's like learning something without investing your money. Instead of losing money, you are learning through paper trading and all. Though you, what happens in simulator trading, you are emotionally not as disturbed as uh, actual trading, because actual trading means actual money you are losing or gaining. So emotionally, you are more inclined towards more, I say, susceptible in actual trading. But paper trading also helps you quite a lot. It's like doing a test, doing a practice in nets for cricket, so which will help you in improving your skills and help you in finding out which strategies you have taken, which should not have taken. So there are many platforms which offer you free paper trading or free simulator trading. You can go for that. Okay. So there are other few points, like it's like a investment and trading is like playing a cricket test match. So you keep taking singles and doubles and wait for the loose balls to hit for fours and sixes. So if you have patience to wait, you will find opportunities, over a period of time, which will be easy opportunities where you can go for those trades easily. Is important is that you keep on waiting until then time. You will keep on taking singles and doubles, but important thing is don't take big loss. Don't get out when you are playing cricket. Now consolidation before resistance I have already covered. As I covered, that good trade will move in profit very soon after initiation. These are the chances. These are the indications that you have taken a good trade. Now, many times I feel that some people feel that new generation is not good in learning, but as per my personal experience, I have felt that this new generation is faster in learning and better in risk management skills. So I always feel that new generation is always better than the older generation. And personally, like I am 43 years old, but I find people who are 25 years old, 26 years old, they know a lot more, or they understand this much better about stock market than what I've realized people who are of older generation, they understand. So even like some older generation people I see taking huge amount of risk when they are like though they are taking futures and options, but when they are trading, they are taking huge amount of risk. But the younger generation I feel they don't take risk. They understand that anything can happen in market. So you have to incline with the younger generation or be towards that side, jahan pe, you understand that you manage the risk very well, and don't think that younger generation is not good. Younger generation is actually better, and you are competing with them now. So you have to actually work very hard to be better in the sport. It's a competitive sport, and I feel personally feel that younger generation is better and faster than us. So you have to be better and faster than this younger generation to be in the to be winner to be a winner in the market. So another thing is keep learning and adapting. So it's very important. The day you feel that you have learned about stock market, so वहीं से downfall आना शुरू हो जाएगा. So always think that at all the stages have a learning mindset that you have to keep on learning all the time. Okay. Learn to take small stop loss and carry your winning trade. This I have already covered. Now one more observation which I have covered is, see, once happen when a stock starts a uptrend journey, initially उसका base is quite big. Okay, and as it keeps on moving, so it keeps on making smaller bases. Means it will go up, thereafter it will consolidate, make a smaller base, and thereafter it will go up again. उसके बाद it will make even a smaller base. Okay, and it will go up again. So जब last में क्या होता है, that stock is very popular and it makes a very small base and breaks out. So generally उसमें it will not go very high and it may be a false breakout. But if a stock is making a bigger base, and is breaking out after a long consolidation pattern, so chances are there that it will have a substantial upside move. So this is just like one point which I forgot to cover, so I kept in the last. See, this was just remember it. If a stock is making a small base, maybe at the end of the session we'll see some chart. Then chances are there that uh, it will continue the up move. But if it's making a very small move, then it may be a false breakout also. So this we have covered till now 2 sessions and certain salient points. Now there are 2 more topics left after this. One is various stages of trader, and other one is trading in the zone. So if you are okay, then I'll go ahead with it. And if you feel that you are tired, so then we can cover it in the next session. So whatever the people say, we'll go as per that. So I hope people are listening. So I just said that.
Yeah, Abhishek, probably next session.
Okay, sir.
Not because we're tired, but I think
Okay,
some
sir.
amount of consolidation is required till what we learned so far.
Right, sir.
So maybe because this is more about the
Fine, sir.
strategy and the mindset.
Right, sir.
That is more about the broader market. So probably we can talk about time it will
Yes,
kind of
sir.
easy to sink
Chadha
in.
sir, right, sir. Got it, sir. Any questions, sir? Chadha sir?
Yeah, I couldn't understand MACD and ADX. Can you just explain me? Yes,
Okay,
take
sir.
a Euroda, this thing and this in the chart. Just explain
So,
to me. I couldn't
got it, sir.
understand it.
So what I will do, sir, I'll include that in the next session, MACD and ADX,
Okay,
and I'll prepare the slides also. So I'll explain it in a better way, sir.
okay, okay, okay.
Right. Fine, sir.
Does
So what we'll do?
MACD सर अगर आप लाइव मार्केट कभी MACD इंडिकेटर लगा के देखेंगे ना सर, चाहे वो 5 मिनट्स में देखेंगे या फिर 2 मिनट्स में देखेंगे, तो जब आप MACD मूव करेगा ना सर, वो ज्यादा आसानी से समझ में आता है. जब वो
Right.
स्टेशनरी होता है तो वो मुश्किल होता है सर. तो
Right.
अगर आप उसको लाइव मार्केट में एक बार 1 घंटे के लिए MACD को देखेंगे कैसे वो मूव कर रहा है, 5 मिनट या 2 मिनट या फिर 1 मिनट में भी, तो आपको समझ में आएगा कि उसका एक्चुअली कोरिलेशन क्या है.
And साथ में sir, you can also put SMA also साथ, SMA और EMA also. Same MACD वाले जो SMA EMA है, तो you will understand okay MACD zero पे आ रहा है at that point जहाँ पे there is a crossover of moving averages. So you'll be able to appreciate it better. Nevertheless, sir, whenever the next session is there, so I'll include those slides again. I'll cover it again, sir. MACD and ADX. Sir.
Okay, can you just tell me the flag pattern? What's the flag pattern? I just forgot about it.
Okay, sir. Flag pattern is okay, sir. Abhi, and I'll just show some charts. Okay, I'm closing my screen, so I'll open just some charts and I'll show you flag patterns. Sir. Okay, sir, you can see this. This is chart, sir, in the screen. So this is chart of Maruti. So what is a flag pattern? Flag pattern is like there's a pole and there's a flag. So this is known as flag pattern. So it's like a proper जैसे normal flag होता है वैसे एक pole होता है and there's a flag. इसके अंदर इसमें like so market has moved up quite a lot and this flag pattern is a continuation pattern जहाँ पे it is forming in form of a flag. Like if you join the lines and also almost like a flag जैसे लगेगा ये. इसको बोलेंगे फ्लैग पैटर्न सर. तो इसमें क्या होता है कि मार्केट इज मूव्ड अप, नाउ इज कंसोलिडेटिंग एंड देन इट ब्रेक्स आउट एंड ब्रेक्स आउट इन द डायरेक्शन ऑफ द ट्रेंड. तो इसका जो टारगेट होता है, इनिशियल टारगेट इज विड्थ ऑफ द फ्लैग एंड स्टॉप लॉस इज लो ऑफ द फ्लैग. एंड इसका जो बिगर टारगेट इज देयर इज द व्हाटएवर द लेंथ ऑफ द पोल इज, इफ यू टेक इट फ्रॉम द फ्लैग, so that becomes the length, that becomes the target. So this is a like typical flag pattern which got formed in Maruti. Now the same pattern will get formed in intraday charts also, or whatever time frame you are choosing also. Usme you will see the same kind of patterns, but this is some sort of flag patterns. Clear, Cheta sir?
Okay, clear. Thank you.
Right. Anyone any other question?
From where we can find out the volumes? You had mentioned volumes.
So
From where
volumes,
we can find out the volumes?
for indicators में volumes होता है sir. You can all just write volumes.
No, that is for particular stock. I'm saying for general. Let's say there are 500 stocks are there. I want to see the volumes.
Sensible में if you go sir, sensible में what happens, जैसे this I'll just open sensible. So sensible में you go to analyze. इसमें there's a screener. You go to screener एंड यहाँ पे ऑल द स्टॉक्स विच आर डूइंग समथिंग उसमें आ जाता है, जो टॉप स्टॉक्स हैं वो आ जाता है। यहाँ पे एक वॉल्यूम का एक हुआ है सर इंडिकेशन। नाउ इफ यू प्रेस द वॉल्यूम्स, तो आज के जितने भी स्टॉक्स हैं ना उनका वॉल्यूम्स आ जाएगा। नाउ बिकॉज
What is sensible?
सेंसिबल सर इज फ्री ऑफ कॉस्ट। इफ यू हैव जीरोधा का अकाउंट तो सेंसिबल इज फ्री सर।
अच्छा,
तो व्हाट हैपेंस, इसको ओपन करेंगे, अदरवाइज यू टू टेक सब्सक्रिप्शन इसमें। बिकॉज आज क्या था, बिकॉज आज के दिन में इट वाज अ स्मॉल सेशन, तो किसी का वॉल्यूम्स आर नॉट हाई, सो यू कैन सी 1.1, 0.9, 0.5, बट अदरवाइज यहाँ पे क्या होता है, वॉल्यूम्स में इट विल शो 10 टाइम्स वॉल्यूम, 15 टाइम्स वॉल्यूम। तो इसका मतलब आज 10 नॉर्मल डे से 10 टाइम्स ज्यादा वॉल्यूम चल रही है, तो मतलब सम बिग प्लेयर्स आर बाइंग इट। So then I will shortlist this stocks. Okay, I'll see then I'll open the chart. Okay, what is the chart of BEL? And then, okay, this is the chart of like, so now I say, okay, it's an strong uptrend and this is the chart of BL. And then I'll go for, if I'm going for intraday pattern, if I'm a long term, then I'll go for some flag pattern is getting formed, some continuation pattern or something like that. Otherwise, I'll go for intraday trading. I'll see 1 minute or 2 minute chart, and if I see some pattern, I will, if I get some opportunity, then I will take a trade in these stocks.
so sensible is just altogether separate software.
It's not software, it's a website, sir.
It's a website. Okay.
Yes, sir. It's free of cost, sir. If you have a Zerodha account, it's free of cost. If you don't have a Zerodha account, कुछ 1,000 rupees per month charge है, sir, इसके something like that.
Okay.
Right. Anything else, sir? Anyone?
Thank you.
Okay, so thank you everyone. And actually, I thought I'll cover 2 more topics, but it's already 1.5 hours. So we'll include that topic, and I'll also include MACD and ADX, and we'll cover at the end of the session so that others who have already understood it, I don't take their time, and I'll explain it to you instead. Right. So thank you so much for watching the session. So I'll take leave now. Thank you.